Let's now go to our Kenya market update, and joining me is Samuel Gichohi, who is from NIC Securities. Morning, Samuel. Let's perhaps just agree or disagree. Would you agree or disagree that the profit-taking run is over, that bull run that the exchange saw up till the 16th of January certainly now seems to be over?
Well, I would agree partially. I think we are still seeing a bit of profit taking. It's just selectively on particular counters. And yes, we have seen a bit of a relenting on that front, especially on those counters that had actually, made very strong runs, like Athi River Mining. I think we continue to see a lot of fluctuation on Kenyan, but I believe that there's quite a lot of interest in the energy sector, primarily because we are seeing a lot of news coming out of there. With the increase in capacity and of course the need to reach our Vision 2030 goals of electrification, and that's really pushing the energy sector up. But we have seen a sort of sit back. We are seeing a mismatch in demand and supply, where we have those who are, the bids want it at a lower price. Those who are supplying want a higher price, and there's a bit of a pull there. So we are still waiting to see which direction the market will take. But yes, we do expect to see a bit of a stagnation, maybe before the market takes a definite direction.
And then I saw a comment that investors are now positioning themselves for the year ends and half year ends, and I was just wondering, indirectly as a result of that, to what extent do the Kenyan market players give profit updates, trading updates and so on? We don't often talk about those on the show. So when the results come out, it really is news, or do some companies alert the market so that there are no surprises, Samuel?
We rarely get profit updates. What we get is profit warnings if there is, if any of the companies feels that there is a significant reason or material reason that they feel their profits will be hampered over that particular period. So normally this is news, and therefore the chances are towards a result period we do see being a very dividend-oriented market, especially on the retail front. And I believe that is why we are seeing an increased activity coming from the side of the retail investor, because they tend to take positions for dividends, and they're very dividend-driven. So we're going to see a lot of activity on that front. We do expect to see those companies that have reported third quarter strong profit gains in the third quarter, like NIC, most of the banking sector actually, I would say, beginning to see a lot of activity. We do expect to see the energy sector also seeing very strong activity as we go into the results period, because they will tend to be the first to announce anyway. And therefore, seeing that we have a bit of increased political risk, I was also thinking that we would expect a bit of a carrot in terms of companies giving a stronger dividend to sort of cushion themselves from that reaction to the political risk as we go into the election period as well.
How would you characterize the political risk at the moment? We've made the comment before that towards the end of last year, it was almost as if psychologically the election is next year, so we're not worrying about it. But now it's this year and it's coming soon. Is the temperature rising, or has the market really discounted this risk?
Well, I think it was what has happened is we have different dynamics working in the market, which have largely, to an extent, actually negated what we expected to happen around December and early January. And that is because we saw a very strong foreign preference for stocks, I think, as opposed to real estate and fixed income, and that actually caused the rally to continue much longer than we had actually anticipated. And that has continued, the bull has continued to feed on itself, and therefore even the local investors are still feeling very optimistic. So the market has sort of, largely ignored the political risk and continued, as normal. And so we have been actually taken by surprise to an extent. And I believe that going forward, we are going to see maybe a little bit of stagnation, considering that a lot of funds, and profit taking, of course, that a lot of funds will go into the elections and all that. But I do believe that the market, this too little time between now and elections to actually see a significant impact.
Yeah, you mentioned the foreign investor inflows, 130% up in the fourth quarter of last year compared to the same period in 2011. So that certainly does speak of confidence. And as you say, the election is not that far away, so there must be a kind of confidence. Looking at some of the stock picks for the year, we haven't done that yet for Kenya. Old Mutual Securities, I see, has tipped Uchumi supermarkets. Old Mutual Securities also has talked about Kenya Power. So those are two shares. And of course, we talked about Kenyan being up 7% earlier. What are the sectors and perhaps particular stocks that you'll be looking at, not in the immediate quarter ahead, but over the year?
Well, I'm staying with the financials, of course. They've continued to perform very well despite the high interest rate regime. And so I would still be banking on more the local giants like Kenya Commercial Bank. In as much as it has hit, it keeps hitting highs. It has very huge growth prospects. I'm looking at NIC. I'm looking at Diamond Trust. I'm looking at Cooperative Bank, and then I'm also looking at the energy sector. There's a lot of attention in the energy sector because, of course, we are seeing new capacity coming online, and there's a lot of infrastructure development. There's a lot of, we expect the county governments also to step up this level of infrastructure development, which will definitely benefit the energy sector, the cement sector as well. That is also an area that I think we're going to see quite a bit of growth, because when infrastructure is growing at that rate, and since our real estate is still very strong, then we do expect that. Consumers as well, consumer goods. In fact, I was surprised to notice that Uchumi is getting a lot of foreign investor attention, while it is not one of the large caps. It is actually more of a mid to lower cap, and therefore it gives us the feeling that there is a shift of attention towards consumer goods, especially with Uchumi being the only listed retail chain getting that attention, getting the bulk of that attention.